Hello world, hello Australia, it's Jamie here, the Crypto Koala. Now today guys, I've got Tim, he's director from DNotes. Good to speak to you today, Tim. Now I understand you've recently just come back from a business trip over from the US and you're currently in Brisbane, Vegas in Queensland, mate. Mate, tell us about your trip over to the US and yeah, tell us a bit about yourself, Tim.
Well, firstly, thank you very much for having me on the show, Jamie. So only about 4 days ago, I arrived back in Vegas, as you call it. I'm a New Zealander, New Zealand citizen living in Australia. And 4 days ago, I got back from the United States where I was on a business trip, staying with some colleagues of our CEO, Alan Yong, who was an early tech pioneer from the early computing days. And he had a very successful company where he created the world's first commercially available tablet computer, which actually went head on with the Apple Newton of its time. So this is going all the way back to 1990, 1991. So like, there were big government contracts in the region of about $400 million and stuff. So we're in very capable hands, and he's a great person to learn from. So I went over there, stayed with him for a little bit, and tried to support where possible. So DNotes is a cryptocurrency. We are a decentralized cryptocurrency, just like Bitcoin or Litecoin and many others. But what we are in the formative stages of is raising money for a company that supports the decentralized currency. So the purpose of the company is to build all of the things that are needed to bridge cryptocurrency to the mainstream world of business and finance. So these could be things anywhere from exchanges and decentralized exchanges through to payment processing, banking services. It could be insurance or maybe one day mobile applications. Basically, think of anything that you might need in order to make cryptocurrency mainstream. And at the present time, a lot of these things are coming down to promoting education in the space and financial literacy. And in that respect, we have DNotesEDU, which is run by two of our very passionate community members, and they promote financial literacy so that people can make better investing decisions and avoid, hopefully, many of the very harmful investment decisions that people have been making when it comes to sort of just jumping on the moving rockets and buying into a lot of the hype that we've seen in the industry, especially in 2017. And 2018 has been a little bit more difficult. And we also have a news website called DCEbrief.com, which stands for Digital Currency Executive Brief, where we try to make sense of a lot of the news in the industry and deliver it in an easily digestible format for everyone. And some of the highlights of the trip was I went to a family office conference in Miami, which DNotes Global was one of the sponsors for. And our CEO, Alan Yong, was on one of the panels and answered a few interesting questions. And interestingly, there is still a very strong interest in cryptocurrencies. There were numerous other cryptocurrency projects that were there, mostly in the space of real estate tokenization, which was quite interesting. A lot of the people that go to that run family offices, though, have a tendency to be in or quite heavily invested in real estate. So I think those kinds of projects have a natural propensity to attend such an event. So yeah, that was a lot of fun, and now I'm back here, and here we are.
Oh, awesome, Tim. Now, I know you just by looking at the, just going over the website, and when I was looking at the DNotes website, come across the education part, which you mentioned, and it come across as free. It looked quite useful, going over different topics, like what cryptocurrencies are, a wallet, exchange. So this is some really useful information there. And I come across a video by Alan Young, and he actually gave a talk on what Bitcoin is. And it's a common question people ask all the time, what actually is Bitcoin? So could you just be able to emphasize what Bitcoin is, Tim?
Okay, well, I think that's a very interesting question, and I think it's just like if you talk to an economist, if you asked 100 economists what something is, you'd get 100 different theories on it. But the way I would answer that question is very much in line with the way Satoshi Nakamoto wrote it in their white paper, which is it's a peer-to-peer decentralized cryptocurrency that allows two individuals to trade value directly with one another. So that much everyone would agree on. Where people tend to diverge is what happens after that. So once we've got a leg to stand on, everyone kind of has their own sort of vision of what it could look like after Satoshi decided, okay, I'm going to put this into the hands of the community and kind of see what happens. So since then, we've seen numerous forks like Bitcoin Cash and Bitcoin Gold and, you know, Litecoin and DNotes and so forth. And everyone has their kind of own answer to the way that they think that the world could look or the way that cryptocurrency should become. And in our case, we believe in cryptocurrency mass adoption. That is our primary goal. We want to create a cryptocurrency that has all the hallmarks that are necessary to bring it to the mainstream so that the entire world can benefit from low-cost transactions in a timely manner that can, you know, you can send money now anywhere in the world instantly for almost free. And that has massive utility for billions of people around the world, especially people that live in countries that aren't privileged enough to have high-end banking services like you and I enjoy. So a lot of people might only earn, you know, $20 a month, and it just isn't economically viable for a bank to give them financial services. And that's kind of a thing that we want to move in and rectify. So of course, everything that we do kind of comes down to this overall vision of a mass adopted cryptocurrency for everyone to enjoy. And our way of doing that is to have both a cryptocurrency and provide leadership. So we have all these decentralized cryptocurrencies, right? And what you've seen, probably especially in 2016, you might remember everyone arguing to no end about the SegWit upgrade, as an example, and Lightning Network. And there were all of these potential forks that continued to happen because everyone goes, okay, like we're not getting our way. We need to sort of, you know, either go in our own direction, which is absolutely fine, or otherwise they continually bicker until the community fragments anyway. So one of the things that we think is necessary is to have a decentralized cryptocurrency which operates like any other decentralized cryptocurrency. But the company itself provides the leadership needed to bridge that currency to the mainstream world of business and finance. And that's where, because it's a company and it's just its sole focus is to build exchanges and various profit-making things that bridge cryptocurrency to the traditional world. In our view, this is conducive, a lot more conducive to a workable approach to making all that stuff happen. And you will also notice that a lot of other people are starting to sort of agree with that approach. So you'll see companies like Coinbase expanding from just being an exchange to getting banking licenses and entering into custodial services and Circle and all of these other people, because, you know, at the end of the day, there are certain approaches that, you know, people can do things any which way, but some do tend to be better than others, perhaps. And we're seeing a lot of people seem to have a similar idea to what we've got.
It seems like that with Coinbase. In other projects, they seem to be evolving it and growing. Like Coinbase recently announced OTC trading, so it gives them extra products to keep adding on. And just going back to Bitcoin, and this is like different interpretations of all these different, over the years, different forks and how it's perceived by different communities. You know, I see it as another really valuable point, as a store of value as well, just as an alternative to gold, just where it provides that alternative option now. So back in 2008, we had the GFC, and back then, you know, that's when Bitcoin was first born, and the first white paper was announced. and the white paper was announced, and there wasn't that alternative to turn to. There was really only gold. So it's good that as a store of value, Bitcoin is around now. And also, when you talk about mass adoption, and I understand there is hurdles to mass adoption. And what do you think, Tim, are some of the hurdles that are facing that's the industry now, the cryptocurrency sort of blockchain industry, cryptocurrency industry? What's the things that's, stopping mass adoption?
That's actually a really good point to be made, Jamie, and I'd probably add to that the point that while there are several components to being money, like medium of exchange, unit of account, and store of value, the way that Bitcoin is always phrased is that it's a really good medium of exchange. It's quite fast, and it can be anywhere in the world at any sort of time, and very easy to trade with. But the way that most people tend to be using it is as more of a store of value. In a sense, there are a lot of people that like to trade it as an example for various profit and gain, but there are heaps of cases around the world now where people kind of go into it as a hedge against market volatility in traditional markets. So there are a lot of people, say in Venezuela, for the last sort of 4 years, suffering hyperinflation, have had an opportunity or an exit strategy where they can go into Bitcoin or other cryptocurrencies and put their wealth there to protect it against, the devaluation of their currency. And having a global currency as an option, as a supplemental cryptocurrency versus just a national currency, obviously local economic instability or political instability doesn't affect the currency as a whole because it's transnational, which has, of course, a lot of benefits to people in countries that suffer from a lot of that turmoil. But in terms of a lot of these hurdles to mass adoption, in particular, we've tended to focus on two in particular, and they are simplicity and security. So, and we also tend to think that security needs to come first. So we've been around for a long time to start. So we started in 2014 at the very beginning, or in February. So back then there were a whole bunch of exchanges. The largest exchanges are mostly all gone. So pretty much all of them ended up being exit scams, or they were hacked, or all these horrible things happened. And very early on, there was an exchange called MintPal, which was one of the dominant exchanges at the time, along with Cryptsy. Neither of them are around now. But of course, there would be big hacks or exit scams or whatever necessarily happened. There's all kinds of legal cases that resulted from it, where a massive amount of, like, every single coin that was traded there, a huge amount of the total coins in circulation were basically stolen and not recovered by their rightful owners. And so one of the massive hurdles for people to get involved in this new technology space is, well, if I have this thing, do I have a safe place to store it? And so a lot of people, they didn't want to deal with, back at that time, paper wallets, or having a Ledger Nano or what have you, and having to store it in a little secure place on the computer or anything like that. So they'll go, okay, let's leave it on an exchange because it's a lot easier. But of course, the trade-off of doing that is it's not secure whatsoever, prone to hacks. The industry is a lot better. There are a lot less major exchanges getting hacked these days. But in the eyes of a lot of people, why would you want to get involved in that if you put in $10,000 and there's like a 10% chance or whatever that those funds might get stolen if you put it in any particular exchange? And so we were listed on both MintPal and Cryptsy, and I don't know the actual amount, but it was significant amounts of our currency were stolen or hacked, and our users were affected by that. And so at that time, we made the decision to create something called the DNotes Vault. So we decided to make a custodial service to keep our community's coins safe. So that's called DNotes Vault at DNotesVault.com, and basically what it is a web accessible online portal where people can log in, much like a bank. All you need is an email address, your name, and accept our terms and conditions, and basically you can get your own little account, and then the whole process takes like 2 minutes, and then you can kind of go in there and you can deposit your coins, and we will put them into cold storage for you, and on top of that we back all deposits with a guarantee fund. So in the event of a hack at the DNotes Vault, the guarantee fund would be used to replace any stolen coins. And that's all done free of charge, as an example. So very early on, we recognized that security was a huge issue. So nowadays, so this is 4 years on, we are beginning to see a lot of people like Coinbase are now had just announced the custodial services, and a whole bunch of other people are now doing that. Some people are using insurance models on the deposits as some examples. But once you've got that security anyway, then we believe you can start to focus on making things as simple as possible. So if people can easily now go, okay, let's go put our DNotes in the DNotes Vault, and then once they're there, we can be like, okay, let's make it as simple as possible so that you can also do it on your own if you want to, without involving us. And so these become like sort of the second level of things that we begin to work on. But in the in the immediate time frame, you need to solve the security first. But let's make things so easy that even your grandmother can use it. And if your grandmother doesn't understand what you're communicating with her, it's probably too difficult to get mass adoption in the near term. Well, there's actually probably a few more things in terms of mass adoption, a bit more than simplicity and security, but a quick list of the remainder that comes to the top of my head would be intrinsic value. There is a lot to be said about a lot of the purposes behind a lot of various cryptocurrencies. We need to get to a level of scale. So merchant adoption is going to be absolutely crucial in getting to the requisite scale so that we can have trading volumes at a significant size, so that when someone comes and drops $10 million on the market, it doesn't just drop the market by 10% straight away. So the reason why you don't see that in US dollar to euro markets is because, well, trillions of dollars are getting traded every day. If I come along and drop like $100 million, then it doesn't have the same effect like it would have if it happened to Bitcoin. So these are some small growing pains. And of course, there's a lot of shady activity in the industry as a whole, and people that are raising massive sums of money who probably wouldn't be able to raise that money if they went through traditional like private placement, through an IPO, making their own company. They raised it without going through the traditional channels, let's say, and raising it from sophisticated investors. A lot of these people didn't turn out to be the people that they claimed to be, or they weren't as competent as they portrayed, or perhaps things just didn't quite work out, maybe incompetence, all kinds of reasons. But what we're probably seeing, well, I would argue what we're seeing now in 2018 is a big slowdown of a lot of these. ICOs have slowed down a lot, and as a result, a lot of people are a lot more wary of what they put their money into. So a lot of the bad actors, they're like, well, look, I've been burned before, I don't want to jump in again. And of course, regulatory scrutiny is now becoming a huge thing. And even today, a bill was brought into came up in the USA, which is symbolic in nature, but it would attempt to create a regulatory framework for cryptocurrencies that would not work to stifle the innovation. So, at the end of the day, whatever people believe when it comes to regulations, there's something to be said about if the government likes you, at the end of the day, things are going to be a lot easier for you to give your product to the general populace and for them to begin using it in a very simple way. So at the end of the day, it's good to have the government on your side. And what we've seen some countries do is take a very hostile approach to cryptocurrencies and at least in the short term, those countries just lose a lot of business. I know Australia, as an example, had the double taxation issue on cryptocurrencies, and basically all the innovation went to Asia and Europe in particular, I think. But Australia rectified that, and now we're actually starting to see a lot of blockchain activity in Australia, because at the end of the day, there's a huge industry that's already here, and it's only going to get bigger. And if one country decides that they don't want to be very friendly towards it, well, there's going to be a whole bunch of other countries, or at least one, that will be friendly towards it and will take all of that business.
Yeah, thank you, Tim. Just going back a bit, mate, about the adoption side of things. So you're offering a custody solution. So I know that's a real big thing that in the future, regulations, securities, projects are looking at a custody solution. So you're offering that through your DNotes Vault. Is that correct?
Yep. Yep. So people can store their DNotes at the DNotes Vault, and all we do is put it into cold storage and keep it safe for them, and they can withdraw it whenever they want. There is a small stand down time, basically as an anti, like we need to make sure that people haven't like hacked your email and then trying to make withdrawal requests, that kind of thing. But within 24 hours, your funds are released, so to speak. Yeah.
That's pretty good. Just some, you think of weighing up the risk and weighing up the convenience, just having it in exchange or taking off on, going through all that process and taking off a ledger onto a ledger in the cold storage. So having a sort of the best of both worlds makes it really easy, really good, and aids in adoption. And there's something else about with adoption as well, is that we were saying about point of sale systems in Australia. I don't know if you know about Travel by Bit, but where Binance invested $2.5 million into Travel by Bit, so they can help with their POS systems in the airports and restaurants throughout Queensland. So I think that that's going to assist them sort of programs, initiatives, helping merchants get involved and making it easy, have the infrastructure in place that's going to help merchants get on board, make it more of an incentive to get on board, make more of an easier to do transactions. There is that volatility, there is that slippage issue, and hopefully like stable coins will help out with that. A sort of BitPay where they can settle it straight away. Them sort of solutions I think is gonna really help with adoption. I think blockchain games as well is a really big thing, and Killer D apps. I think they're going to be real big things. It's going to help with adoption as well. So, now I understand, Tim, that you've moved from the ICO model, and DNotes, you're looking at going into the IPO model. So what is that then? How come you've made that sort of transition? Why are you focusing on the IPO model? Okay,
so the ICO model, I'm trying to remember when the first one came about. It was like Mastercoin, I believe, in 2014 or 15. I can't actually remember. But I believe that was the first. And then it started to get really popular in about 2016. And then 2017, that just seems like a whir. I don't know what happened. That was insane. But it became extremely popular, people making a lot of money. And now we are where we are today. So at the time that it was conceived, we didn't actually necessarily expect to see what happened happen. But in 2016 and 17, we were paying attention to the model, but we made the decision very early on that while it was an incredible capital formation tool, and we very much appreciate how amazing it is at allowing the everyday person to just jump in and throw a few dollars, or a lot more in some cases, on a project that they really believed in. Like, it's, to us, a far improved version of Kickstarter, as an example. And that's really awesome, but what we saw early on as an issue was the potential security status of most of these ventures being for-profit companies, that were essentially basically just trying to raise a whole bunch of money from skirt securities laws, let's say, so that they could raise large sums of money, like well beyond what someone would throw into a Kickstarter. So with a Kickstarter, you chuck in $100 and you get a new watch or something. With this, it was some people were throwing in $100,000. And it is an investment, and there's a lot to be said around this topic, and people have their own views. But all I can really say is that while we saw the potential of it, we wanted to wait until the regulators had had their say, lest we run into the scenario that we're kind of seeing now, where there is a whole lot of litigation that, in our view, has only just started. The SEC is only just beginning to set precedent with various ICOs that were still in progress. They've either shut them down or they've forced them to give all of the proceeds back to investors that were disgorged or had to make the offer to return the proceeds. And if you're someone that was in an ICO and you've lost 90%, they might be quite happy to redeem what they put in. So at the end of the day, it's a lot easier to have the government on your side when it comes to these kinds of things. And if you're trying to make your cryptocurrency suitable for mass adoption worldwide, if you want to make something that has these world-changing implications, you don't really want to run the risk of getting shut down by regulatory agencies. So as a result, we decided that very early on that we would go with the traditional company model, and we would raise money through traditional means. We're doing it through private placement. So our first round is a Reg D under 506C provisions. We're looking for up to $5 million. And then after that, and that money will be used to pay for our ongoing development and also to fund our next round of funding, which will be a Regulation A+ round, which you're allowed to raise up to $50 million under the Jobs Act. And so after that, after say a few years, as with many companies, they will do a full-blown IPO sometime in the future when the company is ready. So we're basically trying to merge, or what we've done is we've kind of merged a similar, kind of a hybrid approach, so to speak, where we do have a decentralized cryptocurrency, but we have a separate company that is taking the traditional route that most financial companies go through, and we're just trying to communicate in between the two worlds, and that's really what the business model comes down to.
Yeah,
I might actually also add, one of the things that we in the future though, like I said earlier, we do believe in the ICO model for its potential, but one of the things that we will be looking into in the future is to assist other companies to launch their own compliant ICOs on the DNotes blockchain. But of course, we're waiting just a little bit longer to see, what the regulators decide. But at the end of the day, we're very certain, or we're confident that there will be room in the future to do these kinds of raises, but they might be, at the end of the day, a lot of companies might have to do a Regulation D offering, much like we have, which would be a lot like a security token. It's for equity, but we would be able to assist companies with those kinds of raises.
Interesting, just with the rules and regulations, how it's not set yet. And I can understand why a lot of projects are waiting out, because you've got, with recently, where you mentioned earlier on about this new bill, where a couple of people in Congress looking at introducing that new bill with the 74-year-old rule on securities, changing the classification of token to digital tokens. So that could change everything. Even, that could have a big ramifications on the actual classification of a token. So it's they're still trying to sort out the regulations over in the US, and I think they need to as well, because it's I think there's not that certainty. And I'll credit to Ethereum and with Vitalik Buterin for the ICO, for that whole ICO boom, being able to raise funds, providing that sort of platform. But the ICO model's not perfect. You know, we had in 2017, 2018, projects raising huge amounts of money for enormous amounts of money without no justification. And there's lots of really good projects out there, there's no doubt about it. But there's a lot of projects, you're like, what did you do with the funds, guys? And it's like, you guys think of all these projects that they've got a token, they've released that token, but the token is being purchased, or it's being brought for trading, to make a quick buck. It's not actually being brought, used for its utility purpose. So they're not, the people that are buying these tokens are not downloading the wallets, they're not storing them on the wallets and then using them for their utility purpose down the track. So what do you reckon about that, Tim? You know, like the flaws, or that sort of the ICO model, that's sort of the sort of ICO model.
Well, that's actually really interesting point that you raised. The way that I personally see it is that a lot of people saw the amount of money that you could raise in the space, and then they found excuses to add a token to a business model. And that led to a whole bunch of various platforms and apps and all kinds of stuff that you could only use this one token on that application. And of course, someone released some research. I'm not going to drop any names because I'll probably get it wrong, but I believe that they only found 5 applications that had more than 400 users per day. So by any stretch of the imagination, that's not overly successful, given the, you know, tens of billions of dollars that have gone into this. Now, their study excluded exchanges. So exchanges do tend to be very popular, but you're certainly right that a lot of people were raising money far beyond what was necessary to build what they claimed they wanted to build. So we ended up in a scenario where some ICOs were spending, you know, $100 per investor. So, you know, that's a huge marketing budget. So you run into all these kinds of problems, and now, of course, when you're raising money in what could prove to be a very volatile currency, let's say you're someone that raised all of your investment funding in, you know, late 2017 when Bitcoin was 20,000 US dollars. Well, your treasury is going to be hammered to about 20% of what it was right now, unless you liquidated the whole thing. But from what we know is that, yes, development teams have been liquidating significant sums of their holdings to pay staff and all the other development costs. And there are some of the bigger ICOs that occurred earlier on in 2017. The current Bitcoin price is still at around about what it was at the time that they raised funds. So there are a few that are okay, but I think most of them, you know, started to raise as Bitcoin reached hyperbolic trajectory. So a lot of people are in a lot of trouble at this time. So a lot of people are readjusting the way that they are deploying their capital. They are, you know, quite a few projects have been laying off staff. I saw Steam laid off 70% of their staff. And I mean, at the very beginning of an exciting innovation, there are a lot of really interesting ideas, and it can just take a little bit of time for, you know, a whole lot of investors come along, a whole lot of new ideas get tried, and then we figure out quite quickly what does work, what doesn't work. And at the end of the day, like, this is kind of like a microcosm of what the traditional world of business is like. You know, in traditional business, 80% of businesses fail within about 10 years and 50% within 5. In this case, we've got the same kind of ratios, except it's happening at 10 times the speed or faster. So at the end of the day, everything's been pretty crazy the last couple of years, but right now, particularly once the regulators started to get involved and started making a lot of developers quite concerned about whether they still wanted to go through with doing an ICO, along with investor wariness. A lot of people got burned and didn't want to jump in. Again, what I think's kind of happened is, among many other things that have affected the price, is that there are now no longer a lot of new projects happening now that are raising funds to support Ethereum and Bitcoin. So before, like, Ethereum and Bitcoin were going crazy because if you wanted to invest in an ICO, and some of them were raising like hundreds of millions, you had to buy Bitcoin and Ethereum first, which propped up those markets. And of course, that money goes into Ethereum, up Ethereum goes, and then it goes into the ICO coin. But then, of course, the development team will begin to liquidate some of those funds to pay for business costs, right? Of course, that was more than offset by the next wave of ICOs that were coming in, which were always greater in size than the ones preceding it. But once, of course, the regulators got involved and investors started to get burned, now we're seeing that there are very few ICOs going on, and there are no new projects that are, pushing up the Bitcoin and Ethereum price. And now we've probably got more liquidations going on than people buying in. And we've seen that in the markets, but it's not all doom and gloom. This is just part of, maturing as an industry, I suppose. And I've got a very positive outlook going forward, especially probably, into 2019 and beyond. I think we're probably going to go sideways for a little while. A lot of people seem to think this. It would be my hope, and it's also my thinking, that we are somewhere near the bottom, hopefully at the bottom right now. And anything can happen in the next year. There's a lot of bills, like that bill before Congress, as one example, that could have a huge implication on the number of people jumping into Bitcoin and the Bitcoin prices. And at the end of the day, price does its thing. A lot of people are really focused on price, but the most important thing is probably the adoption of the products that we are building. And you were talking before about all the decentralized applications and stuff like that, exciting things that are being built that use blockchain. But it tends to be my thinking anyway that we will have mass adoption at the time when you don't even know that your apps use blockchain. Because right now, blockchain is the selling gimmick to get people, in large part, to use the apps. Like, oh, this uses blockchain, it's really cool, and these are the benefits of using blockchain for this app. But imagine if we had the blockchain equivalent of, say, Snapchat or Facebook Messenger, and everyone just downloaded that on their mobile phone with no knowledge that it used blockchain. And I tend to think that if a lot of people started to take these approaches and just build what people want and need, and they don't necessarily overhype the blockchain part, it shouldn't be the amazing buzzword that it's become, and focus on what your application can do rather than the fact that it uses blockchain as its main selling point. And I think we're starting to get there. And I think going into 2020, we're going to see a lot of amazing applications get developed, and DNotes Global is certainly going to be a part of building some of these awesome applications.
That's what I think someone like Apple did so well, just simplistic. They built for the people. They built it for easy to use, simplistic design. And it's like with blockchain, it's used real heavily. And when people get an Apple, they use Facebook or they use Twitter, they don't want to know the underlying system. No one's interested in that. Like the everyday person, they just want to use it. So I think it's that, like you said, when people use it, they won't even know it's blockchain. It's like people use the blockchain word it's still exciting. Blockchain technology is revolutionary, and I think it's but the everyday person don't really care. I guess don't really care about it in a sense. And now just thinking of when you were saying about also sorry, I'm just going to go back a little bit as well. And I know there's something through DNotes is worth mentioning about as a new trading bot. So I know you guys, don't you developed, and is it something you would be able to talk about a little bit more, Tim?
Okay, so some of the things that we've been working on at the moment are applications that can show off, in particular, our payment software. So we build things for all kinds of reasons, but one of the things that we've built recently is the DNotes trading bot. So a little bit about that bot is it can be used on any market at STEX Exchange, that's STEX, and also any market at Bittrex Exchange. And so we recently added Bittrex in the latest round of development, and we're continuing to develop it. But what the bot allows you to do is create very simple trading strategies using bots that are told when to buy and when to sell. And so most people might use it for a grid trading strategy, which I won't go into here. I've made videos on this, however, that people can feel free to look at our channel, DNotes on YouTube. But let's say you're quite a simple trader as one such example. And let's say you've got like $10 of cryptocurrency that you like to trade between a narrow window that you see. So a lot of the time you'll see a cryptocurrency going between the same kind of range. And what traders will like to do is they will like to buy at the bottom end of that range and sell at the top end of that range. But manually it can be quite frustrating to, you know, buy here and come back 8 hours later and then put your sell up and then put your buy up. But, you know, and this bot just basically allows you to do that automatically. So you say, okay, automatically buy here and sell there. And that's basically what it does. And you can set like as many of these as you like. You can create quite complex trading strategies with it if you like, which I again talked about in the videos. But some of the other really cool things that we've actually been doing is, well, I'll go on to DNotes Pay. So we built DNotes Pay, which is like a payment processing, automated invoicing software that is intrinsic to the DNotes blockchain. So what DNotes Pay allows a user to do, or in particular a merchant in most practical applications, is so let's say DNotes, you can have two users that have two wallets and one person can send money to the other. In this case, we can use it for the sale of goods in a shopping cart, say at like a merchant's website. So if you're using, you know, normally you'll use PayPal or Visa or whatever, and you'll fill in all your details at an online website, and you know, you press send, and then all of these kinds of things. You know, your order gets confirmed and all that kind of stuff. What DNotes Pay allows you to do is exactly the same thing. If you're a merchant, and with just the click of a couple of buttons, you can easily install our WordPress and WooCommerce plugins, which lets you do exactly the same process that your customers are used to doing when it comes to using Visa or PayPal. And on the user side, it's just like doing any old cryptocurrency transaction or DNotes transaction. So what we've actually done is we've got the standard DNotes transaction ID, which is say this long, and then we've got a separate invoice number that is attached to that transaction. So when you send your order to the merchant, the blockchain will automatically, or from the merchant's end, will query the blockchain continuously, waiting for that payment to be made, and once it detects it, it will release and distribute the goods. So let's say it's an online video, or in our case, that it's the trading bot. So if you want to use our trading bot, you need to, you know, send X amount of DNotes to a certain invoice number, off they send, and then automatically the network will decide on your behalf, okay, cool, this has been this has been paid, and then it unlocks the software, and then you get to use our bot. And like the bot was made, one, to be useful for traders, but also to showcase the fact that we've built DNotes Pay. And so the main advantage of DNotes Pay is it has no intermediaries. So it is one of very few solutions where you don't need a middleman to take 1 or 2% for the sake of merchant financial services. And while people could go and set up their own server, that can be very confusing, it's technical, and it could take a whole day or more to set up. And we've simplified that whole process to just a few clicks. And again, I've made videos on that on our channel if anyone wants to go and learn more.
So it seems like another solution as well, what you're offering there for merchants through that program. And just with bot trading, I don't do any bot trading, but it's something that arbitrage and something that it does interest me. I've always been a holder. It doesn't interest me getting up middle of the night trying to get into American times to try and get the trades, or setting up buy and sell orders, shorting the markets. It's something that because I work full time, I can't really. My TAs is half decent, but I don't think it's good enough where to put the hours into something that to do on a daily basis. So trade bots is something that does interest me, and something I wouldn't mind trying to get into in the future for sure. I know you were saying about 2019 and beyond, and I think I'm quite bullish on the future, and I think that Q1 is going to be interesting, just with BACS in January, potentially approval for the deadline for the VanEck CBOE ETF. Hopefully that is approved, and also with Fidelity. So there's quite a few things earlier on in the year in 2019 that could really kickstart the tidal wave of institutional money coming into the markets. So it sounds like you guys at DNotes are quite geared and ready for that, with your own token model, with the services that you're providing. Am I correct in saying that that DNotes is gearing towards moving away from the past? You're moving into a regulated space. You're gearing towards institutional with your custody solution, and with all your other solutions, your consulting and things like that. Is that correct, Tim?
I'd say for the most part that is correct, yes. So we are more than aware that we need to be able to invite institutions to come and play in our space. So these could be, people like Fidelity and BACS, to, could be pension funds or all kinds of things. And a lot of these people that would be involved in, say, the future DNotes system will have very stringent criteria when it comes to investing or trading our token. So when like you were saying about the custodial stuff before, a lot of these kinds of services that you see big companies offering, we again want to be offering these things ourselves, as that may be a lucrative business model in the future. So like, we've got a 4-year track record of storing cryptocurrency on behalf of other people and just keeping it safe. But for all we know, maybe in the future, when the time comes, we might expand our product offering to other things as one such example, and institutions might even be involved in that. It's again, it all depends on how Q1 2019 goes, and then from all the days onwards from there. But definitely, if BACS and Fidelity and all these other ETFs and stuff are approved, it would definitely be good jump start for the industry. And I think that if we can just forget about price just for a little bit, focus on the adoption side and focus on building awesome products, I think that everything else kind of price will take care of itself.
Oh yeah, for sure, Tim. Definitely. I think that adoption is going to be the biggest driver of it all. So mate, Tim, thank you so much for talking with me today. It's been interesting to hear about DNotes, and if anyone wants to check out DNotes, if you want to get involved, if you want to check out the bot, trading bot, if you want to check out the education that they've got there, it looks pretty useful, pretty handy. You can. Just going to give my disclaimer. I'm not saying to go to invest in DNotes, as I do with all my videos. Make sure you do your own research. I provide a platform for projects to share on. So, yeah, just make sure you guys just check them out before you get involved with the project. So, Tim, thank you so much for your time. It's been a pleasure talking to you. Have a great Christmas, mate. And I'll catch you later.
Hey, thanks a lot for having me on, Jamie. Merry Christmas to you also.
Yeah, see you later, mate. Bye.
Yeah, bye.